Welcome back to the floor of the CME group here in Chicago. I'm Killer. Let's get straight into the zone, the CMZ zone. Wow, folks, we talked about this last week. We talked about it yesterday, and I've been emphatic about the fact that we've seen complacency in the market in this 10% up move in the S&P the last 3-4 trading days. Well, there's some news out of the New York Fed. They alluded to the fact that there was an unknown bank that borrowed $500 million overnight. It's the first time the ECB needed to lend money since February 23rd. So that's a pretty distinct note, kind of the catalyst for the movement in the markets. But we've really seen a down move, a absolute fall off a cliff in the S&P, the Dow Jones. We saw that insatiable thirst, which I've talked to you so many times, in the treasuries. They really came in. If you caught my 5:30 CNBC Squawk Box hit yesterday, I talked about this, and a lot of people yesterday morning were looking at me like I had three heads, but I told them on the chart they want to back and fill to that 2.03%. And guess what, folks? It came to fruition within 24 hours. They came down, tested that 2%, squeaked out to 1.97%. So they've been grabbing treasuries in a ferocious style today, as well as grabbing gold. Gold made a new high at 1825. We're sitting on the high right now. So things are moving. Pandemonium is here. I hate to be the bearer of bad news. I actually put on this nice bloody red tie today because I knew the markets were going to move. It was just a matter of time. So I think the EU, the lack of clarity, the disappointing Sarkozy-Merkel situation, and then the catalyst of the money being borrowed overnight really put some gasoline on the fire. And now everyone is talking about potential risk off for the Lehman situation. Saw a tremendous battle this morning with Simon on CNBC and Kramer. If you got to catch that, that was amazing. But there's a lot of people talking right now, where is this market going? I really think the safe haven of the treasuries, the leadership the treasuries have provided for so long, it's what it's all about, folks. Here at the CMZ, we have had our fingers on the pulse of this bond market. It has dictated where this market is going. And right now we're seeing this equity lost. We saw the move all the way down to 1131 in the S&P. And yesterday when I tweeted out that 1201.75 high, the HFTs, that high frequency trading, they wanted to take that out, get all those stops out of the market and bring it back down. Then that 1201.75 served as a ceiling. And folks, it's been straight dive over the cliff since then, down to 1131. The old killer Magna 1135. So I think today is going to build out, as the volume continues to come in here, we're going to see a down day. Don't know how it gets better tomorrow. We're waiting for the EU. The bazooka bend moment. Remember that? That put that confidence into the market. We're looking for a bazooka bend moment over in the EU, the ECB. Somebody's got to come out and say something, get their arms around this before it gets any worse. Not trying to breed panic and fear, folks, but it's here. I hope you're having a good day trading it. That 10-year, that ultra bond, all those treasury trades have really given you an opportunity to trade that volatility. Hopefully you're being disciplined and being nimble. And one other thing you cannot forget in these markets, be the hammer, not the nail.
Hey, bring it back, bring it back. Now double your money and make it stack. I'm on to the next one.